Welcome back to another episode of MillenniUP. So today we are being joined by Ryan Alexander. He specializes in debt solutions for people to be able to get themselves where they need to be financially, and it's a wealth of knowledge there. We wanted to bring him on because, as everybody knows, two of the biggest issues that we face with buyers has been being able to save enough money and having trouble with their credit. So Ryan, tell us a little bit about you, what you do, what got you into it, and how you got here.
Sure, I'll tell you the fun story. So it all started back when I was about 22, 23, somewhere between 22, 23. 9/11 had happened. I was doing commercial real estate and I lost everything that I had. I was working for almost 2 years, some big deals, lost everything I had. I was fortunate my grandmother helped me a little bit. I got into the world of insurance, was able to pay off all my debt. And then at 30, the financial markets crashed again and I lost everything I had again. So from 30 to 35, I couldn't get a credit card. I couldn't get an auto loan. I couldn't even get a refrigerator box if they offered it to me. I was just in such a bad way. And after I crashed and burned the second time, I realized there's definitely got to be something to this credit world. And I was slowly building back. And then one night, of course, this was like, I'm going to say a little over 6 years ago. I'm sitting watching a Facebook ad, and it's this 20-year-old kid with $2 million of available credit on credit cards, 200 credit cards. And I'm like, there's no way, it can't be that easy. And this kid, I bought his $500 course. 6 years later, I'm teaching credit around the world. And it's the coolest thing because nobody talks about it. Nobody teaches it. The banks and lenders, they're handing out credit cards like lollipops to people, but nobody's teaching the rules. Nobody's teaching the risks, and nobody's showing you the ropes as to how this thing works. That's where I Teach Credit came about. I teach people the best and fastest ways to build 800 credit scores with $100,000 credit limits and enough points and miles to travel the world. So that's what I do.
I think you've told that story before.
Once.
Yeah.
It's cool. No, I mean, it's the greatest thing because nobody really talks about it. And my biggest thing is the credit repair industry, in my opinion, is probably the second biggest scam next to college education, in my opinion. And nothing against education. I think education is great. I think specialized education is really good. I think that's where people can make money. Generalized education, people come out more lost than where they went in, but they also come out with a lot of debt. And you guys know, being in the real estate world, how many people are prevented from buying a house because they have so much debt? And a lot of it's student loan debt with almost no chance of paying it back. So the reality is, it's like, if you do really, really well in high school and you know what you want to go to school for, I'm all for it. And I'll show you how to get the best financing to get those student loans. But if you don't, invest more in like daily things, invest in basic finance education, like credit education. It controls your insurance rates, it controls your interest rates, and it helps improve all of the approval odds, whether you're trying to get a credit card, buy a house, start a business, or who knows what. It's amazing that we don't talk about it.
You and I share very similar opinions on higher education, so I'll leave that there because I could go on that rant for another 40 minutes alone.
I saw Jen light up when you were like, "Oh, bad, college education bad." She's like, "Oh yeah, let's do it."
It's just brutal because it restricts so many people from doing so many good things for so many years. Mm-hmm. And that's why, like, if I can just teach people basic finance for a fraction of the cost as to what people spend in college education, and they come out not knowing a single thing about finance. I'm talking basic budget, basic credit, and basic investing. So, that's where I wanted to be able to teach people. In credit repair, they're like, I'm going to give you a fish. Sit back, relax. 12 months later, $1,200 to $3,000 later, your score hasn't changed. You don't know why, and you don't know what to do about it. What I teach fifth grade.
I was going to say, what differentiates what you do from credit repair? Because I think when people hear, that's why I specifically said that you're in the business of credit solutions instead of credit repair. People kind of just like, they have that preconceived notion that all it is going to just rob you of your money and not going to do anything to actually benefit you. And there's so many scams that are told about it. So what do you do that's different?
So credit repair company, like I said, they're going to give you a fish. I'm going to say, hey, you see this fishing rod here? I'm going to sell you this fishing rod. I'm going to show you how it works. Then I'm going to teach you how to roll your sleeves up and use it for the rest of your life. Because when you understand that it's just 5 simple algorithms, if you could just understand the 5 algorithms that make up your FICO score, it's like looking at a sheet of music. If you understand how to read it, all of a sudden it makes total sense. If you don't know how to read it, it becomes complex, confusing, frustrating, and people walk away from it. And they'd rather not deal with it than just take 2.5 hours. In 2.5 hours, I teach the entire credit system in my class. 2.5 hours pre-recorded content at a fifth grader could understand it. I have teenage kids that join my group, but they even follow me on TikTok. They'll follow me for 3 months. Boom, 750 credit scores just like that. They're like, I did everything you told me and my score shot up. It's amazing. So I teach people how it actually works, and I force them to do it themselves because I'm not going to apply for loans for you. I'm not going to go to work for you, and I'm not going to pay your bills for you. But if I can teach you how to manage it on what I call the 7-day credit cycle, okay, you get a credit card, right? What happens? You get a 30-day spending period. Mm-hmm. Your first payment's not due until 7 weeks after you start spending. No wonder people are in trouble.
Yeah, right.
It's 7 weeks after you get it. How fast does a debit card take the money out of your bank account?
Right away.
Immediately. Why are people in trouble? Because the system is set up to make you fail so you can become an ATM interest-paying machine for the rest of your life.
There's a reason they don't teach this, because they don't want people to know.
Here comes conspiracy, Jen.
That's why I was really excited to have you on today, because how passionately I feel about credit, generally speaking. I think it's absolutely ridiculous. And I mean, I could go off on my own tangents of what I think is absolutely insane and how medical costs shouldn't be involved in that, because a myriad of other reasons that I won't get into.
We want you to save lives for a living, but it's going to cost you 6 years of your life and $200,000, $300,000. Thank you very much.
Yeah. We want you guys to keep having kids, but it's going to cost you $100,000 per kid.
And that's another thing where people trying to buy houses. They come to me and they're like, I went to medical school, for how many years? Hundreds of thousands of dollars of debt, and their payments are $900 per month. And it's like, we just have to do better. And that's where, if I can help people with income-based repayment by getting their credit score high enough, they can go on income-based repayment. Now buying a house is simple. But it's a matter of us working together, and it's a ripple effect. It's not Ryan Alexander teaching credit. It's what Ryan Alexander can teach his center of influence, and it's what you all can help me do to just spread the little bit of knowledge. It's not a lot of information. It's just very simple daily disciplines. If you can give it 15 minutes a week, you can master your credit score, and it has zero impact on what your income is. I don't care if you make $25,000 a year or $2.5 million a year. I have a guy worth $200 million. Credit score was high 500s. Couldn't get approved for a mortgage. Couldn't get approved for a credit card. Doesn't matter. It's all about understanding the factors. So regardless of your income, we can absolutely help you if you're willing to do the work. And it's hard to be disciplined. It's simple to figure out the credit system. It's not simple. It's not easy to be disciplined every day. And that's where we have to just kind of form a community that's supporting each other and encouraging each other every single week.
Yeah, well, it's kind of like, it's kind of like a lot of things. Everyone knows how to do a push-up, but it's hard to do it.
Right. Everybody knows how to pay their bills, but why do we wait so long?
Yeah. I was going to say, so say somebody wants to buy a house,
yep.
And their credit is not looking the best, or they just don't know, but it's probably lower and they probably just don't know because they haven't wanted to look it up. Mm-hmm. How much time should they allow from having a conversation with you to actually being prepared to buy a house?
So it's a good question, and that number totally depends, right? Because let's just conceptually say, I don't know what you can see here. Let's just say this is time, right? This is the timeline. Here's buying a house, and here's getting started. For some people, they're right here, and I need 12 months. There's some people, and that's not even necessarily true. If you have bad credit, missed payments, collections, repossessions, things of that nature, I may need 12 months to get you there, okay? I may also only need 10 days. I've boosted somebody's score 102 points in 9 days. I said to him, in 2 weeks, you're going to get a boost in your score that's going to change your life forever, and you're not going to believe it when you see it, but when it happens, I'll know because you'll be calling me. 9 days later, I got a screenshot, and my phone starts lighting up. I was on another phone call. Boom, he calls me. Boom, he calls me again. He calls me the third time. I'm like, are you okay? He said, did you see the screenshot? I said, no, I'm on another call. 102 points in 9 days. That can happen if you understand the algorithm. No smoke and mirrors, no magic erasers, no disputing, deleting, or removals. It's just understanding the factors that make up the FICO score. And that's what I teach. And many people don't know the difference between a mortgage FICO score and a credit card FICO score or an auto loan, or the difference between a Vantage score and a FICO score. These are all things that I like to teach. Basically, they're all just different ways of calculating a credit score. It just depends on what you're going for. And so, if you guys want me to go into, can you see how fast my brain is already 10 topics deep? You tell me what you want to talk about. I'll cover it. If you want this to be like a part 1 of 3 series, I mean, I know for the next 2.5 hours we're going to be on here. No, I'm just kidding.
I was like, I'm like, well, there's already multiple things that we could like totally dive into, but I mean, like, what do you find is the what would you say is like the easiest thing that somebody can do to boost their credit that is frequently overlooked?
Okay, so the first thing is understand your FICO scores, right? Like, just understand the basic factors. Understand that you can't miss a payment. I don't care if it's a $30 credit card payment. You don't feel like paying it. That can cost you 100 points. Okay. The second thing is learn to pay your balances every single week. Simply weekly. I say every 7 days for 7 weeks. I don't care if you have a lot of money with high credit scores and high credit limits, or if you have lower balances, lower credit, lower income, lower credit scores. Every 7 days for 7 weeks. For most people, if you have credit cards, every 7 days for 7 weeks. PTZW. Pay to zero weekly. What that means is your credit card, treat it like a debit card. Okay. You get a credit card. Here's the month of June. You spend for 30 days. Let's say you spend $1,000. Your first payment's not due until July 23rd. Does that sound like a good idea? No. If somebody came to you and asked to borrow you for $100, do you want them to pay you 7 weeks later? No. You want them to pay you back in 1 week. If you get into the habit of paying to zero weekly, that is how you MCYB. And all my followers, all the members of my class, they love this. MCYB. If you pay to zero weekly, you get to make credit your bitch instead of you being the bitch to the banks and to the lenders. Why? Because now you're earning cash back. Now you're earning points and rewards. And now you're getting a sign up. But just imagine you go to buy a house and you're like, oh, I'm going to go buy $10,000 of furniture. That sounds nerve wracking. But what if you could get a brand new credit card the week you settle on your house? And that brand new credit card, you can go get all that furniture at 0% financing and have enough sign-up bonus points so that you and your spouse could go celebrate that house once you've got it fully decorated and go take a trip anywhere in the world. That's the power of credit if used responsibly. If not, it's going to make life miserable for you. But that's what I would tell people. Learn every 7 days for 7 weeks, pay to zero weekly. I'm not excited.
Yeah, I've actually never heard of that where you pay weekly. Like obviously there's stuff with your mortgage you can do with making bi-weekly payments and all that good stuff. What's the number one problem? Obviously not understanding FICO, but like what's the number one like psychological hurdle you see people take? Is it really just the fact that they don't like talking about money? Is it a lack of understanding?
It's embarrassment.
It's embarrassment. Yeah.
It's pure ego getting in their way because they don't understand and they're afraid to look stupid. They're afraid. I'm going to tell everybody who's listening to this right now, the best thing I ever did in my life, I learned to become the brokest person in every room I went into. Because I learned something from everybody else. Yeah. And then I started noticing all of a sudden, I wasn't the broke guy in the room anymore. In fact, in my high school, I almost failed out of high school. Crazy enough.
You're in good company. There's Jen.
We have so much in common.
Listen, I'm high-fiving both of you guys right now. Let's go. So, right, I was the guy that almost failed out of high school, crashed and burned twice in life. And my closest friends thought I was never coming back. My friends now, they're like, we don't know how the hell you pulled it off. But now I'm the guy when they call, they're like, what part of the world are you in? Like my dad calls me, he literally will say, hey, Rye, what part of the world are you in? Because it's true. Like one day he called me, he's like, hey, where are you at? I'm like, I have beaches of Aruba. And he goes, no, really? I'm like, no, I'm in Aruba. He goes, when'd you decide that? I'm like, last week, cheap flights, I decided to go. I have the ability.
Yeah.
Right. And so like the ego gets in the way from people wanting to learn. And here's the thing, right? People are not going to hang out and say, hey, you guys want to talk about your FICO scores tonight and how we can fix it? No. Yeah. But you know what? You'll sit and talk about your fucking fantasy football scores all damn day long and all the stats and how you're going to build that. Guess what? You deserve to be broke then because your focus, your priorities is not in the right place. If you want something better, you got to put in the work. And if you do it, it's not that hard. And with people like you providing the education for somebody like me spewing the message, like they should be latching to you because you're obviously linking them up with other awesome people that can take them, even if it's this much further in life, it's that much further to get closer towards their goals.
And I would say that, you're definitely somebody who's in like kind of an extension of who we are, which is, we don't have all the answers and nobody has all the answers, but it's about like become under our tent and we got a guy, we always have somebody for something, whether you have got a leaky faucet or you need life insurance or obviously, credit advice. So I agree with that. And I think that is that's throughout finances. People don't like talking about finances. Couples don't like talking about like figuring out how to set it up or how to segregate it, or and personally on lender calls where like I can tell that the like one of the spouses, and usually the husband, is a little quieter, and it's because he knows that his day is coming, or his like any minute someone's going to ask, well, what's credit card debt look like? And they got to sit there in front of the couple's got to sit there in front of each other and say it, and I've had it where he's like, well, I think the card's at 17,000. And she's like, you told me that thing was like at 5, like 2 weeks ago. What's going on?
Dirty little secrets come crawling on out.
Dirty little secret. But the thing is too, is a lot of couples won't even get on that call with us because they're smart enough to know that they're going to have to start talking about their finances, and people just don't like doing it.
One of the funniest stories. First off, I've been on many of those calls, like where you pull the credit, and you're like, "So what is this so and so thing?" And the spouse doesn't know the payments, and that gets awkward. But to your point, Seth, and this is so funny. I did a skit video one time, just like a funny video for one of my social channels. And have you ever gone through an application or like any kind of fact finder with people, and you're like, "All right, so what's your income? What's your credit score look like? What's your phone number? 215-844. It's like, boom. It's like, they don't want to talk about the important stuff. No. Anything stupid, they'll throw it up right out of your face. And it's like crazy. People just don't want to talk about the important things in life because they don't know. And it's, we want to show that Mercedes or that brand new Dodge Challenger, but we don't want to show that you have no money in your bank account and like you can barely afford to pay the thing, or that you're still living in mommy and daddy's basement. Like, we need to stop that as a society. And I was the idiot doing that. My best friend bought a house when he was like 24 years old, 25 years old. I was the guy that was going to every freaking party with 2 30-packs in the back of my brand new car. Well, who was laughing last? He was.
Yeah.
Like, now he's one of those that was like, I can't believe you turned around, and now I'm making up for lost time. But guess what? It's way harder to start at 40 years of age than it was at 25 years of age when he did it. He's way better off than I am. I've got to work way harder than he does.
Yeah. No, oh, go ahead, Jen.
No, go ahead.
No, I was just going to say that, or I was going to ask, what is like what's like one thing you would tell a homeowner who, because this is a real estate podcast, it's like the one thing you would tell a homeowner who's like, my credit is in the low 600s. I've looked online. I know that I can't qualify for loans. Like, what is the thing you would tell them, if they were sitting here listening to this?
Sure. First rule of credit, build a budget. Because if you don't understand your finances, you're never going to be able to figure out credit because it's all about how much do you spend, how much do you make, what's the differential? Are you plus or are you minus, right? You figure out the budget first, then everything else becomes easier, because also that's when you turn the light on and you say, okay, where am I really spending? Like, I had a woman, she said, I don't know where my money goes. And I said, cool, send me your bank statement. She goes, you want to see my bank statement? I said, do you use cash or do you use your debit card? Debit card, cool, send me your bank statement. 68 transactions average a month at fast food. Between convenience stores, Taco Bell, Pizza Hut, and there was another one like Chick-fil-A or Popeyes or something. 68, it was almost $700 on average. It was like a $10 average per transaction. Wow. And like some of them were like 2 and 3. Like, you could see every day she went to Dunkin' Donuts. Every day.
Yeah.
And every day.
You don't need to pull up my bank statement at any point and see how often I go to Wawa. We don't need to look at the collective like $2 or $3 coffees I get every day.
Listen, you want to hear a funny story? When I first met my wife before we ever got married, I said, if you and I are going to start dating seriously, she was in a tight financial position when we met. I said, that's going to stop. And people are like, you're going to tell her what to do? I'm like, well, yeah. I'm like, and people take this the wrong way sometimes, but I'm like, do you see the Yankees picking up dead weight in life? No, they don't. They pick up people and they say, hey, we're either going to work towards a common goal or it's not going to work. And before we got married, I said, your 400 credit score, we got to fix that. I said, because that prevents me from being able to buy things in the future. Because if I do buy them, I have to take your credit score, which is going to lower my interest rates. Or I'm going to get denied, or you're going to get denied. And now I'm the only qualifying income, which means I'm going to be debt heavy. Your name's going to be on stuff. And I got all the risk. It doesn't work that way.
Yeah.
My wife now, when she broke 700, she cried. We were sitting on the couch. I'll never forget it. She cried. I was like, what's the matter? And she went like this, and she showed me her credit score. And that was when she broke 700. Then she broke 750, and it was
I did that to Seth.
Yeah.
I hit my broke 700, and I was like, I did it!
Right? Like, it's a major milestone to get to 700. And if you can get to 700, time will get you to 800. as long as you just continue to maintain the same thing. And then when she's right now a 789. We were sitting just the other day at her oldest son's
Why the hell isn't she an 800?
What's that?
You can't get her at 800? What the hell's going on over there?
Hold my beer, Seth. Hold my beer.
You're not going to just go, done.
Yeah. Going from 500 to 600 is simple. For most people, I can do it very quickly. It's just about building diversification. To go from 600 or 700 to 800, that's all about depth and time.
Mm-hmm.
And so that's building initially is easy. Okay. I can give an 18-year-old kid, if I have cooperation from their parents, I give all 18-year-old kids a 700 credit score within 30 days of turning 18. Pretty cool.
Yeah.
Now they don't have to co-sign for the kids' credit cards. They don't have to co-sign for the kids' auto loans.
And like, help me help you.
What's that?
It's like one of those, like, help me help you. So
Absolutely.
like they don't have to do that.
Absolutely. And then I say to the parents, not only are you going to give them a 700 credit score, but what if their graduation gift from high school or college is 80,000 points to go anywhere in the world or the country they want to go? Pretty cool. That's a great gift. And guess what? It doesn't cost you anything. You're literally taking sign-up bonuses from credit cards. You're building the kids' credit, and then you're opening up a world of opportunity. Because I'm going to tell you right now, I don't care what any kid's looking at. When they see it through their own eyes versus your TikTok or your Instagram channel, it is life-changing. And I didn't start seeing the world until I was almost 40 years of age. And I promise you, I regret in life being so stupid and being so lazy with finances, thinking I needed the new Jetta back in the day. I needed to have the nice clothes, the new shoes, and I needed to go out to the bar every freak. No.
Well, it's also easy when it's easy because, like, I mean, I remember when as soon as I turned 18, I got a credit card. It was really, really low limit, like under $1,000. And it was one of those, I used it for gas and groceries. I paid it off immediately. I treated it like cash. I very quickly was able to get that credit limit up. And then I treated it as it was a debit card. And then, but once things got harder and once things got more expensive, it became ignorance was bliss.
So one of the things I was going to say with regards to homeowners and realtors is 12 months ago, I was telling people, if things are going to start getting tight and tough, you need to make sure right now, don't start leaning on credit cards. If you know you've got expenses or if you know things are going to get tough, get a line of credit, use your house's equity, get the line of credit or a loan up front. Even if you get the loan and you don't necessarily need it, but that loan could be a cushion. What so many people did is they leaned on their credit cards and then their credit cards got maxed out. And then when you go to get that line of credit or that loan, banks and lenders are like, you're already maxed out. We're not giving you a loan now. And you're like, well, wait a minute, I have a perfect payment history. But you're on the verge of default. You borrow money when you don't need it, they'll hand it to you. They'll be like, hey, pick a card, any card, whichever one you want, right? When you need that money, when you need that loan, they're not so quick to give it to you.
That's right. So what's your general sense on the American consumer right now? Like, I mean, you're literally talking to the people who are, you're literally talking to the people who need to improve their finances. So like, what's your just general impression of where the American real estate consumer or the American consumer, let's just talk about generalities. Where's the American consumer right now? I mean, I know that, I've read the statistics with the 1.3 trillion in credit card debt and all that. It's probably more by now. But what's your like general feeling about how things are going?
I've got 3 words, how things are going. Yeezys, $300 sneakers. What? DoorDash, $17 for a $6 meal. What? And I need a $9 latte every single morning before school. Excuse me? That's what I think the general consumers are. We have no concept. And I was teaching it was a Girl Scouts community. They had asked me to come in and teach them. And this little girl, she made a comment. She says, well, Mom, that's your job to buy me Uggs and to get me Chick-fil-A when I want it. The mom's eyes was like Jen's right there. Like everybody was like, no, she didn't just say that. And I looked and I said, I went right to the mom. I was like, that's your fault. You made that situation. And that's a hard thing because consumers in America today, there's no such thing. What you should do, you want something here, you should save up and buy it. American consumers, they want it now, and then they'll pay interest for the next 6 to 12 months on that item.
Yeah.
They have no concept of delayed gratification or earning something before you buy it. And that's really scary. And especially like with the real estate market, because I mean, I'll ask you guys this. You've seen what's happening in real estate. Everybody thought the prices were going to come down. Have you seen prices come down in the last 3 years, 5 years?
And it's what we've been trying to tell people, that it won't.
Yeah, Jen's very bullish on the market.
They're not building houses where I am, and where the starting houses that they're building, the starting house is $600,000.
Yeah.
Yep.
Yeah.
Starting house.
I would say you're absolutely right. I think about this quite a bit, and about the American consumer, and I know a lot about the psychology and kind of like the lizard brains that we have, and it's like it's kind of like, still, even with the food system, like, we're not designed to handle all these shiny objects around us all the time. And it's a shame because we all get penalized financially. Not to say people shouldn't have personal responsibility, but it's really hard to, like, I mean, if you're a parent, you want the best for your kids, and you have all these value systems that make you go out and try to buy this stuff. Everyone says you should have a vacation every year, and you should have a new car and all that. And that's like all these dogmas that are in our society make things just really, really hard, I think, on the consumer too, because it's like food, the way food is put into grocery stores, and how like everything that's sweet is like 3 feet off the ground because that's where the kids are and that's where they're at eye level. Like, all this stuff is designed to kind of override our better senses. And so I feel bad because there's a lot of people out there, who think it's like normal or worse than like what you're talking about, Ryan, that they're entitled to that new car lease that's $900 a month on a depreciating asset. And I feel like, you would have a really good sense into that psychology. I think with housing, it very much just comes down to, in the span, because it's an appreciating asset, it's different because it's not a good or a service or a car or something that depreciates over time. That asset will appreciate. How you get into it, how much money you borrow, and what that payment is very important. But I think that's kind of separate from like cost of goods and services and the things that, all the other shiny objects that people get. I don't know if you'd agree with me with that.
I agree 100%. I mean, you said something interesting, like an appreciating asset. First off, how many actual American consumers, if you said the word appreciating asset, know what it means?
I know.
We take that for granted because of what we do every day. But if you say an appreciating asset, like, I would venture to bet probably 50% of people wouldn't know what an appreciating asset is. They'd be like, oh, something you're grateful for?
Hey, even better point, I bet you even less know what a depreciating asset is.
Sure.
Because appreciating is kind of a word you use, so you kind of make say, okay, it goes up, but depreciating is not something that people think through. And I have a funny. I went to buy a car, and my family, like none of us drive like fancy cars. Like, I'm the youngest of 6, and none of it, like, cars are just not our thing. And I went in to get this like pre-owned Honda Accord. I got an Accord in 2006. I still drive a Honda, but I went to the car dealership. And I was going to get a pre-owned I had some cash that I had gotten from some real estate commissions. And I, they did the thing where they greet you and then they leave you. They leave you on the floor for like 5-10 minutes so you can look at all the new shiny cars. Mm-hmm. I went and I just looked, I was like, that's a nice car. But it was like really weird for me because I was like, I went in one time to buy something, but I was like, I was going to make a spontaneous purchase, but I was very cognizant of it happening. I sat there for like 15, 20 minutes, was thinking about it. I was looking at it again. I called my wife. Like, I was looking for a reason not to buy this thing. But I called my wife and she's just like, just buy it. You've earned it. You deserved it. And I got a really great rate on it and I got it paid off, but I had the ability to do it. I know a lot of people just go into a foregone conclusion like, honey, we've had this car for 2 or 3 years. It's time to get a new car. And then we see the finances of these people. And it's rough. I mean, I think the average car payment in this country is like $732 or something like that.
I didn't realize it was that high. I mean, I knew it had to be over $500 or $600 or in that $500 or $600 range. I didn't realize
it was pre-COVID. It was below 500, and now
that's because the interest rates were so low.
Yeah, but it is
0.9% financing. Now you're looking at 9% financing.
Yeah. So I have one final question for you, and then we can hop off. What's your credit score?
You want to see? I don't know if you'll be able to see it like this, but
Good one.
actually, you know what? Here's what I'm going to do. I bought this just for the purpose of this because I like this, and this is where people can really learn. Well, I love you. You just called me right out in front of everybody, but you know what? This is what I tell everybody. If you're going to hire
Well, I'm not calling it. You can make something up, bud.
no, no,
It's
no, I won't.
932.
I won't, and here's why. That's where the smoke and mirrors comes into play. I have people that have
Yeah.
credit repair businesses that I've come across with 550 credit scores trying to teach other people credit. And I'm like, you're a fraud. So here's what I'm going to do, and hopefully you guys can see this. I'm going to make this bigger, but as you can see, that's my name. I'm going to log in live, okay? And I don't have the highest scores because I use my credit a decent amount. All right?
I don't have the highest scores.
Ready?
That's good.
Now I'm going to show you something else. Mortgage scores. Now that's FICO weights, or that's Vantage scores. Okay, that's Credit Karma. Ready? Now we're going to go to a site called My Score IQ. Okay, and I'm going to do the same thing because I love and believe in transparency. Sorry for the ring light, but
Sorry.
there we go. Now,
What the hell is that 788? You got a 788 on there, bud. No, that's great.
Experience tough. Now here's what's crazy. You want to see something funny? My mortgage score, because if you understand how the credit system works, when you're looking at getting a credit card or like an auto score, they're typically looking at a FICO 8 score. Why? Because they're only looking at the last 2 years of your credit history. When you're looking at getting approved for a mortgage, they don't care that you got your act together in the last 2 years. They want to know what your history's been like for the last 7. Remember, I told you 10 years ago or 12 years ago, I had crashed and burned and I had just started building back. If you look, this will show you my auto score. Okay? You want to look even more when you're going for your mortgage score. My mortgage score has been holding true for a while. It's slowly growing up, but that's because it's based on a 7-year average. So for many people, and I know people are going to ask you this question, why does my Credit Karma score say I'm at a 720, but when the lender pulls my credit, it says I'm at a 650? That's because a Credit Karma score is looking at your last 2 years of history. A mortgage lender is looking at an Experian FICO 2, TransUnion FICO 4, and Equifax FICO 5. Notice Experian FICO 2, it's the oldest model. That means they're looking at the last 7 years of my history. 7 years ago, I didn't have much history. I didn't build it then because I didn't know how to do it and I didn't know how important it was. So great question. And that's one of the reasons I love to show my credit scores, because people know that I'm real. And if I can show you,
right.
and this, what's that?
No, I said no. That's awesome. I mean, it's. Obviously I would have been shocked if it wasn't like it was like an 800 or something like that. So
for those who are only listening on our podcast platforms and cannot see the actual results that are coming up, he's around the 801s area. So log on YouTube and you can see this for yourself.
Now, for those of you who are looking, I always talk about credit usage. Remember I talked about that kid who had $2 million worth of credit limits? I wasn't doing that. But if you can read that, I have $251,000 of available credit limits on my credit cards. I have 5 charge cards. 2 of them are personal, 2 of them are business, and then I have actually 3 of them are business because the Capital One Business Venture X card is also a charge card. That card doesn't have a credit limit. So these 4 cards, these are my business cards. These are my personal cards. Yeah, these are American Express. These cards don't have credit limits. They don't show up in your credit card usage. And I can tell you, I can spend over $100,000 on this card right here alone, just on this card. So that's not even included in that. So going back to our conversation earlier, it's better to build credit for the day that you need it, because then it's already in place.
Yeah.
If you have to get credit when you're already in trouble, it's either too late or it's really, really hard. So, but there's lots of ways that we can restructure that. I know that was one of the things Jen said in the beginning. I do sometimes help people to restructure their debts. It's just a matter of understanding what their actual situation is, what resources they have at their disposal, whether it's actual, money, whether it's family or friends. Sometimes there's a lot of ways. If 2 plus 2 doesn't get you to 4, there's a lot of other ways we can solve the equation. That's where one-on-one coaching comes into play. And that's where me asking enough questions to say, okay, how could we potentially solve this problem to help the consumer, to help you, and obviously to help me? Because the more people I help, it's more just about building the brand. I want to teach society. I want to help bridge the gap in lifestyle inequality through basic credit and financial literacy. And that's why I love being a part of the show. And again, I just want to say thank you for inviting me, because that's really what it all comes down to.
Yeah, well, I appreciate it. And so, how can someone find you? It sounds like you're on TikTok, Instagram. Like, where are you best found?
Yeah, Facebook, Instagram, TikTok, YouTube. My most popular thing is going to be on TikTok. I'll give you guys a link. If you go to my TikTok channel, the unfortunate thing is I have over 20 imposter accounts. If you look at my TikTok channel, I have 106,000 people on here, 252,000 likes. Not that it's to brag or anything, but if you were actually look at my name, I Teach Credit, and you go to users, these are all imposter accounts. That's that many people trying to impersonate my account. So it's scary. It's hard to send people. Just go to iteachcredit.com or send me an email at info@iteachcredit. That's the safest way to get me, because if you go to TikTok, who knows who you might find.
All right. So we'll put that in the show notes. Ryan, I really appreciate you hopping on, and we will we'll hopefully be able to help a lot of people here.
Right.
Yeah, I definitely hope so. And if there's anybody's got questions, Seth, Jen, if you guys ever want to do a Zoom call for like all of your clients, you want to post the Zoom night, I'm happy to do that, to do a live demonstration. Like, I know I showed you guys my score, but if you ever want like a live demonstration, I don't know if you guys do that, but I've been more than happy to host that for you guys.
Yeah, drop in the comments if you want us to do that, and if you would jump onto it as a listener. I think that would be great to get some feedback on. So I'll try to get that in the works.
Okay, thanks, guys.
All right.
Thank you, guys. Take care.
Thanks, Ryan.